Right, in this video, I'm going to use our euro-pound settings as an example. I'm going to start from the bottom. I'm going to look at the data. I'm then going to show you how you could plan for losing streaks, what risk per trade you could use if you were just solely trading this euro-pound strategy. Nothing else. How stress-free would that be if you've only got to look at one pair or only got to worry about trading one pair? So I'm going to start from the beginning. I'm going to look at the full data on this strategy and then drop that into the risk management tool and then show you just in isolation a quarter and a bit's worth of performance to show you how transparent every trade is both ways on the screen and then in the data and then in the list of trades section too. So I'm going to give you a full walkthrough of how you might use the euro-pound opportunity on your own trading account whilst planning for probability and taking your risk management to new levels. So let's get to it. Right, so firstly, this is the data from 2017. Now actually what I've got that in incorrectly at until I do the next bit, that was in at 3%. So let's just change it to 1% for now because the percentage that we risk we haven't identified yet. So what we've got here is we've got data since the 1st of January 2017. I'm just writing this down. We've got data on 614 trades and we've also got a win rate of 50.65%, which is nice. Nice win rate, although as we've said before, win rate doesn't mean anything until we also look at the risk to reward and how the expectancy plays out. What we've got here is a 1 risk to 1.3 risk to reward, so that all stacks really nicely, and because the win rate's a bit higher, it's going to be easier for you to handle that emotionally, and you're going to see less consecutive losing trades, much like, I haven't got my 20p piece at the minute, much like again comparing the dice to the coin analogy. We're going to see more losers trying to get a 6 than we would if we were tossing a coin to get a heads. Right, so the next job is to use that data to plan for probability. What we want to do is make sure that we've identified what our maximum risk on our account is going to be. That's down to personal choice. But also then you've got to consider your drawdown recovery, which I've spoken about before. So when your account gets to a point where you go past 25 or 30% in terms of a drawdown period, then you need 33, 42-ish% to get it back. So keeping your account level at around an exposure of 20%, factoring in that losing streak is going to be the ideal situation really. As soon as you lose 50% of your account, you then need to flip it and get 100% gain to get back to square one, which is obviously going to be very difficult. So let's go to the tools section. All of our members have access to this. We put the account balance in 1,000. Let's say we have £1,000. Let's say we've got the data, so we've got 614 trades because we've just taken that from the strategy. This would be impossible, pretty much impossible to do if you were trading manually or discretionary for one or two reasons. One, it would take you an eternity to do this, and secondly, when you're back testing, you're going to want to think that you made the right decisions at that time. So if it was playing out technically for you, you would probably like to think that, yeah, I'd have held that, or yeah, I'd have got in there. But it's very different in the real world situation to see if you'd have been thinking as calmly or as rationally as that, especially when there's no real money involved at that time, or you might have had a bad day or whatever, lots of different things. So anyway, we're putting 20% in. So what we want to do with that 20% is make sure our account can absorb a mathematical losing streak based on the win rate data that we have. So if we put 20% in, this isn't really valid for now, but we're going to put that in anyway. So the break-even win rate we need for this strategy is just 43%, and we know we've got a win rate of 50.65 on 600 trades, so there's a chunk of data there. So that's where your positive edge comes from, a combination of win rate and risk to reward. So anyway, back to it. So what our calculator then does is tells us what losing streak we may experience and see. So what we've got here are 3 metrics. We've got something that's likely to happen. So it's likely that we're going to see a losing streak of 4 trades. A cautious losing run would be 8. and the most probable losing run at any one time is 5. Now, what we'll do now is flick to the strategy, and on the 1614 trades, have a look at that data to see how many it was. So here's one I made earlier. This is what our members have got that we've prepared for them to show you the level of detail that we go into here. So here's the euro-pound settings from 2017 to 2021. Here's the data. So what we've got here is what I've taken from the spreadsheet. The data has just changed ever so slightly since we did that because the win rate's actually just gone up to 50.65. But we've got the probable losing run of 7 and unlikely losing run of 11. But the actual losing run that we've experienced out of the 600 and whatever trades, was 608 at the time we did this, was just 6. Okay? So we know we could see between 8 and 11, and that would then mean if whatever we risk as a percentage point, we need to be able to absorb that within the 20% maximal drawdown that we want to never get to, but plan to use in a losing streak should that ever happen. Okay? So we've only ever seen an actual losing run of 6, but we've actually seen a winning run of 9, which is nice. That's not going to bear any effect on our decision making, but the factual losing run of 6 probably could. So what we'll do then is go back to our probability calculator and now finalize what percentage risk per trade you would trade if you were just trading this euro-pound strategy. Right, so here we go. So we had 5, 8. Oh, there we go. I've noticed the error of my ways. I didn't actually input the win rate. So 50.65. There we go. And them numbers match what was initially on the spreadsheet. So always double check your stuff. So what this tells us is we've seen 6, 11. So 11 is unlikely, but you might want to plan for very, very unlikely. The plan of you, the probability of you seeing a losing streak of 11 on these stats is going to be very marginal. When I say marginal, it'll probably be sub 5%. We've got that data on our probability losses here, but because, let's just have a look. Let's say we've got 100 trades data. We've got a losing rate of 50-ish%. So here we go, look. Losing run of 11 trades on a 50 to 45% losing streak is going to be sub 3%. Yeah, this sort of ballpark here. Less than that really, but erring on the side of caution. So that puts everything into context for you based around that. So let's plan for a losing streak of 10. Okay, and what that's going to do is if we had a losing streak of 10 trades, our account would be at risk of 20%. Okay, now when they happen and if they happen, who knows? But we are definitely likely to see a losing streak of 6, as we said, at any one point. What this tells us is that we can risk 2% per trade on this strategy and have factored in a losing streak of 10 trades. So my question to you is, how are you going to feel based on that information and the preparation and the detail that you've just gone into? I'm pretty sure you're going to feel less stress, less anxiety, less worry. I think you're going to feel more confident, content, comfortable. You're going to check your phone less and you're going to be more detached because you know this is okay. I've planned for 10 losing runs, a losing streak of 10. We've only ever seen a losing streak of 6, but that doesn't mean we won't see a losing streak of 10 because it's pure spectrum of probability. I've planned for it. I know the detail in the data that I've got. And I'm comfortable. Whatever the outcome, I don't need to interfere, I don't need to think, I don't need to hope. We just need to let the trades play out. So now what we're going to do is go back to the strategy, put the 2% risk per trade in, and look at what those gains look like, and then go back from October just to look at some trades in the list of trades journal log 2, just to see how it all plays out. Right, so here we go. So Euro Pound, let's change the risk percentage to 2%. And from 2017, your £1,000 account would have turned to £7,727 because of your initial balance. So that's the level of detail that we've got here. Okay, so that's a 672% net gain on the 614 trades. Now what we can also see here is the maximal drawdown is accurately at 20.52%. Now that's a little bit higher than what it is in a relative state, because your account balance has been increasing over that time period too. We know the maximum losing streak we ever saw was 6, and at 2% risk per trade, that would be a 12% liability, obviously. But because your equity curves increased, that's why that's slightly higher. So let's just get into some finer detail, because this is a long period of time. You want to be able to see how the trades look, how they look in the list of trades section, and how it looks, I guess, in more relative, real world trading, and ultimately what you would do to gain confidence in your decision making. So I've just changed this now from the 1st of October 2020 to today, yeah. And what that shows us is that if you've started with £1,000 account, since that time period at 2% risk per trade, there were 48 trades. You'd have made £300, so a 30% return in just over 4 months. I don't forget this is one pair. You'd have only seen maximal drawdown at £94, and it's just, yeah, nice and straightforward. Bit of a winning run here. So let's look at the chart, and this just shows as well on the strategy tester the power of compounding over time. So 30% over 4 months might not sound a lot. However, when you go back again to what it looked like over a 4-year period on just this one pair, in a calm, stress-free state of mind and living, they're obviously very good returns. Yeah, you can see that back on there. So 2020, and this is just the flexibility and functionality you've got as a trader to get the confidence and belief from your strategy. You can't do this with any other way of trading, in my opinion. So we've put in the 1st of October. Let's just look at some trades, and let's look here. This is the trading journal that you could use as your own journal to review as well what you got versus what you should have got. And that might be down to you thinking, well, I've seen a candle, I'm going to close that trade early, and interfering when you might not need to. So we start, this line here indicates the 1st of October, and you can see there's some news or something breaking out. Could have been Brexit at the time, I don't know. All the days are blending into one at the moment. But we hit 1, 2, 3 losers on the bounce. Now, if you were a new trader fresh into this, you're probably going to be thinking, this is rubbish. You know, I've hit 3 losers on the bounce. This isn't very good. Without understanding the data, the probability, the spectrum of how things can play out, the markets will do as they want. And if you're following a signals group, then you are going to feel that way because you can't get access to their data. They might not have ever backtested. They might have backtested. You just don't know. You're just following blindly. Whereas what you've got here is all the data to help you have the confidence and belief in your flawless execution of the strategy, which is very, very important. The more you chop and change around, the more you are never, ever, ever going to see consistency, because you are not being consistent. Okay? So then we've got a winning trade here. Yeah, so these are all quite small moves, they're just because of the view on the screen. Then a stop loss, yes, and this is all matching up here. Look, 2 winners, so that was the stop loss. Then we've got a winner here, nice. Then a stop loss, there we go. Actually, a losing run of 3, which is 1, 2, 3. Then 2 winners, 3 winners, 4 winners, then a loser. So there's the 1, 2, 3, 4. There's the loser. But you can just see how this just plays out. Winner, loser, 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 winner, 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 loser. Yeah, so this is just every single trade here. So a losing run of 3, a winner, a losing run of 3, a winning run of 3, and these are all of the trades. This is a lovely winning run here. So that was beginning of December. Yeah, so winner, winner, loser. Here we go, we're approaching it now. So we've got winner, 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 loser. So that's all them winners in there, yeah? And that's how very quickly then your account will start compounding and building that buffer from your initial balance. So we had a trade yesterday, which is this one. I was in that myself, just ping, alert, enter, close. There was a winner here as well a few days prior. So the purpose of this video was ultimately to show you transparently how you can take a strategy, look at the data, plan your execution, really get into the detail in terms of how you want to plan your account up. Yes, you can risk more than that and get bigger gains, but it depends on your ability to understand probability, absorb the losing runs, be emotionally detached, because ultimately that's how you want to be. That's where you are most rational. You are irrational when emotions are involved. So we've planned with the data, the probability of losing streaks. It's a very profitable strategy, and it's really simple. I've not had to draw any lines on charts. I've not had to be subjective. I've not had to massage my ego. All we've done here is trade what the algorithm, our edge strategy, tells us to do. And that's a nice place to be. So hopefully that video helps demonstrate and show you in a transparent way what it is we do, how it helps, and how you can take your trading to new levels, not only in terms of consistency and profitability, but also from a detachment and an emotional control trading psychology perspective. Any questions, feel free to drop me a direct message. Thank you.